Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's topic is on the Law Society's bookkeeping compliance, and today's webinar is accredited by the LSUC, which is the Law Society of Upper Canada, for 1 hour of CPD credits of professionalism. So again, I repeat that this webinar today has been accredited by LSUC for 1 hour of professionalism credits. And as mentioned in our chat window, I kindly request you to send us an email after the completion of the webinar confirming your attendance. And alternatively, you can also change your name, your display name on our webinar system. So today's topic on Law Society's bookkeeping compliance, should it take 10 minutes to 3 hours, is going to be one of those topics that we've covered within uLaw. We've tried to demystify, if you will, those requirements. There's obviously a lot of fear factor. There's a lot of doubts about what those documents are, how easy or difficult is it to manage and maintain them, and what are the expectations as you as a legal professional in terms of complying with these documents that need to be produced on request, either for a spot audit or a scheduled audit that you may have. Okay. So the next 1 hour is going to be talking about the different components of the bookkeeping compliance, how that closely follows the Bylaw 9, which is the one that dictates or mandates the need for you as a legal professional to present these documents as a way of showcasing your compliance with the guidelines and the rules. So as every uLaw webinar has an agenda, and so does today's webinar. And we're going to be covering these following topics. What are trust and general ledgers? What does it take to maintain them? So we're going to talk about ledgers in general, specifically talk about trust and general ledgers, how they differ, and how easy or hard should it be to manage and maintain them. We're going to talk about what are the receivables and disbursement journals, and why do you need to maintain them as well. So for the cash or income that you received, or for the expenses that have gone out of your business, you want to manage journals, which are traditionally by time period. So what is your journal for the month of February, or what is your journal for this particular quarter? And we're going to talk about receivables and disbursement journals for both trust and general. What is reconciliation? Okay, and this is one of the big topics legal professionals often ask us. And how can this process be simplified? If there are rules that govern them, how can those be made simpler for the legal professional to deliver these documents and generate these reconciliation? And why should it be done to begin with? What is a fee book? Why should a firm need to maintain it? Fee book is also part of those checklist of items that you need to document and present on need basis. And we're also going to then talk about some other compliance documents, such as Form 9A, a deposit slip, and even intermatter trust transfer records. And we're going to talk about how the importance of these documents and the need for you to manage and maintain them, and how using a software, any software for that matter, can, in today's context, in the today's world that we're in, how can that software help you manage and maintain these documents, allowing you to be confident about your business and be confident about the compliance so that you can focus your effort and your energy in doing what you do best. And so again, we're going to talk about those benefits of a legal accounting software at kind of a closure of this particular webinar. Okay? So before we get into those different types of documents, I want to reiterate real quick for those who are new to the accounting systems that are available. This is a little blurb from the Law Society's bookkeeping guidelines that highlights the types of accounting systems that have been used, over the longest period of time, some of the advantages and disadvantages of these different systems. So starting with a manual double entry system to today's legal accounting software, you look at a diverse range of what these systems offer as both advantages and then, the disadvantages that they present as well. So if you look at a manual double entry system, it's really simple. It's fairly inexpensive, but if you look at the disadvantages, it's very time consuming. So it's a very manual task for you to manage a double entry system. So a credit and the debit, the mirror, the transactions that you have, it is your responsibility to remember and ensure that double entry has been posted. Okay? So it does not automatically post to your subledgers. So you have to ensure that you post it yourself. And obviously there are arithmetic errors or human errors that play a part, and hence it's always hard to define or judge the quality or the value of that particular system if it can be prone to errors, especially when it comes to legal accounting and compliance. It's much harder to go back in time to make those correct measures. Overall, it takes more time. And then you look at a OneWrite system, you look at a spreadsheet software. And again, spreadsheets could be a Microsoft Excel, which is one of the most predominantly used softwares for spreadsheet systems. You have Google Sheets, but it's definitely not as powerful as a Microsoft Excel. Again, very inexpensive. It does come along with your Microsoft suite of products. There are rules and formulas that you could have within these Excel sheets that allow for automatic calculations. But again, very time consuming because it especially if you're running with transactions that are larger quantities, and if you're doing more of the same work, then it's almost an automated. It's not really an automated task of doing it. It does require training, and again, there are errors due to incorrect formulas that you may end up having. So those were kind of the very top two-level types of systems we wanted to highlight. And if you just walk down that path from spreadsheet to a general accounting software like a QuickBooks to a legal accounting software like a PC Law or uLaw, then you start looking at the advantages of those systems. You look at designed for trust accounting. If you look at a legal accounting software, as I mentioned, like PC Law or uLaw, you're looking at a design for trust accounting. So it was built for that. It was built for a legal professional by design. It does its automatic calculations. It posts to subledgers, and it produces financial documentation like the compliance report that we're going to talk about today right out of the system. But what are the disadvantages that have been highlighted by the compliance, by the bookkeeping guidelines? That it's expensive and it requires training. Well, with the advent of technology, with cloud and improvements and disruptive technologies that are out there, that cost has substantially come down with software like uLaw that makes life easier, cost-effective, and compliant-ready. Now that you kind of have a context for the different types of accounting systems that are out there for you to use, we want to talk about the main agenda of today's webinar that are captivating these different documents, and we'll go one after the other discussing what these documents are. The first one would be your ledger. Okay, so what is a ledger, or what are ledgers when it comes to both trust and general? So if you're a legal account professional who only deals with general, then you probably, and you don't have trust, then that's fine. Then you don't have to worry about trust, but it's always a great practice because it empowers you, and in many ways it mitigates the risk of non-payment if you can exercise trust. So if you do invariably have trust involved in your business, then you do have the obligation of managing this ledger. Now, every transaction that you receive or you disperse needs to be recorded. And it's important to highlight that every transaction. So when you look at a retainer that you receive from your client as part of that retainer agreement, and you put that into your trust account, it's very important that both both the received and the disbursed are recorded. So you could have disbursements out of trust, you could have money coming in, and the subledgering that needs to happen behind the scenes. Now, each ledger within this particular documentation should also have a running balance by date. And it's important because it's by the date, as that dictates when that particular transaction happened. And so if you want to take a quick look at some of the samples that the Law Society provides, first and foremost, important thing to capture is the date itself, the particulars about what was it for, and you can see it's overall grouped by a client. Okay, so in this particular case, this is a trust ledger for Leslie, who's the lawyer here, and for her client, Kim Kirby, which is the matter, and the matter is a loan to Taylor. You actually have the trust ledgers, which are the receipt that you received in trust as a retainer, and the disbursement, leaving you with the balance of 0. Okay. Likewise, there is another matter for Leslie, which is for Mr. Piper, and you again have a retainer that you just received for $565, and after the work was done, you then transferred that amount. After you invoiced the client, you transferred that amount from your trust to your general, and hence the balance is 0. Now, if I were to look at the general ledger of this particular matter for Mr. Piper, you look at the fee. A particular invoice, as I mentioned, was raised, and that was invoice 000 or 002, and it could be a billable or it could be a flat fee of $500 plus the HST of $65. Again, in this case, I'm talking about an Ontario context, which is 13%. You're ensuring through this ledger, and as part of the general ledger, you're almost differentiating the actual revenue amount with the amount that you charge as tax, because that you got to pay back to the government anyway. So this $65 is not your money. So this $500 is your money. So the ledger, in fact, allows you to give you that clarity about what's your money really worth, right, for that particular matter. And it talks about when you did that trust transfer, and you could have done that trust transfer in any way possible. The old school way, and again, it's still being followed, is you write yourself a check. So you have a trust account in your bank, could be TD, RBC, any of the leading banks or other banks, and you could have, let's say, your general account with the same bank or maybe another bank, and you write yourself a check for $565 from your trust account to your general account. Now, again, with the advent of technology, today you are able to do that electronically. So you are able to do an electronic fund transfer of moving that money online, logging into a bank, and taking that money, $565, and transferring it from your trust account into your general account. Now, because of the advent of technology, there are needed checks and balances. So one of the bylaw documents that are required in Ontario as part of Bylaw 9 is when you do that, when you actually do an electronic fund transfer, there is a form called the Form 9A, which I'm sure you're aware, that you need to record for each and every transaction that moves money from trust to general electronically. Okay? We spoke about that earlier. We're going to get to it. But in this context, as I show you these two ledgers side by side for this particular matter, Peter Piper, you can certainly appreciate what the Law Society and what your compliance report talks about. So you've got a retainer, you've put that into your trust account, you want to track that. That's a transaction that happened, you've recorded it in your trust ledger. And then you raised an invoice of $565, dividing it with HST. And then you moved that money. Once you raised an invoice, then you're eligible to make that money by moving money from trust to general, and that's exactly what you've done, and that's been recorded as part of your trust ledger, the money that was transferred to general because of that invoice. Finally, the payment arrived into your general account by doing that electronic fund transfer or writing yourself a check, and that's what you see recorded when it happened within your general ledger. Okay? Really simple. It doesn't have to be complicated at all. Moving along, we want to then talk about the next set of documents that the Bylaw 9 requests you for. And these are the receipts and the disbursement journals for both trust and general. So there are 4 documents in total. So the first 2 documents we looked at were your general and your trust ledgers, so your true ledgers. Now you have 4 documents. You have your trust receipts and your trust disbursements, and then you have general receipts and general disbursements. So 4 in total, and 6 so far. And the journals are slightly different. almost have the same information, but there's some additional information and it's captured in a slightly different manner. They are recorded for a single type of activity, either for a receipt or a disbursement, and can be maintained, in fact, are maintained for both trust and general. The additional information that you capture in a journal are the method of payment and a purpose. Okay, so method of payment could be your check. The method of payment could be credit card. The method of payment could be money order, etc. So the journal allows you to capture the method of payment as well as the purpose. So let's take a look at this particular example of Mr. Piper. Okay, so on July 5th, that particular trust receipt, the retainer was received from Mr. Piper as a corporate retainer of $565, and the method, so the same information that we looked at the trust and general ledgers, right? Slightly different perspective to that whole story. And what is that perspective? It was amount, but how did he pay for it? He paid it through check. Okay. And if you were to look at the general, you're going to notice that the transfer was done from trust to general of $565. And how did you do it? It was a trust check that you wrote yourself, and that was the check number. And why is it important to capture that? Is so that when someone audits you or asks you, okay, where did that money come from? How did it go into it? Can you show me the audit of how that happened, when it happened? It's important, again, to ensure compliance, but also have a peace of mind to have done that right from design, right from the beginning. So if you've got a design, if you've got a flow, if you've got a workflow of how you capture this information, then it just becomes that much easier when time comes to audit. Okay? So I hope this was, kind of explains to you how we've gone about the trust receipt journal. The same thing for trust disbursement. So let's say you've had a disbursement off your trust, or if you've had a disbursement off your journal, it's important that you capture that as well. So let's take a quick example of check 002, which is the method and the check number. And this is a general disbursement. And that disbursement was done to Acme Office Supplies. Coming to the question of the purpose was that it was a stationary purchase. What was the amount? It was for $200. And did you pay any HST for it? Yes, you did, of $26. And that was the total paid. Okay. So now that we've, in the last 15 minutes, maybe spoken about the trust, general ledgers, and 4 different journals, we move on to another very important document that the Law Society requires you to capture and sign off on every month. Okay, so every legal professional is required to sign off on their monthly trust reconciliation. Again, if trust is not what you do, this is, again, one thing off your checklist. You don't need to do this. But if you do manage trust funds, it is very important that you reconcile your trust. As close as your bookkeeping numbers are to your real-life bank numbers, the much better off to you. And if they are off, that's okay. So many times people are concerned, what if my bookkeeping software or where I keep my books are different from the bank? Well, it's okay as long as you are able to define why that difference is. Okay? Again, I want to reiterate, it's okay for the numbers to be off as long as you can justify why they're off. And that's what's being asked, okay, at an audit by the auditor. So as long as you have the information, then you're totally fine. Obviously, if you can ensure that it's the same, nothing like it, because then you've done the homework, you've actually done the effort, taken the effort to ensure they're balanced. And what does it take to actually do that? Okay, the reconciliation is defined as an accounting procedure that demonstrates that your recordings are correct as and when they happened between your bookkeeping system and the actual real-life bank system. And we've kind of broken it down. There's a lot into it, but we've fundamentally broken it down into 4 steps. And step 1 is the actual recording of the bank statement and the balance. So if I were to highlight this particular step 1, this Leslie's Trust Bank reconciliation, obviously it's a really old example, August 31st, 2010, but the particulars of the information remain to be the same. What is the balance per your bank statement as on this particular date? So it's important that you generate your reconciliation on a particular date. You're closing your books for that month for trust that particular date. As of 31st August 2010, the balance was $40,993. Okay, so that's the first information you want to capture. Look at your bank, tell us what that is. Recording of any outstanding checks and deposits and any bank errors, if any. So in reality, if everything were to be, in this very perfect world, your bookkeeping software would just follow your bank. But but we're not in that ideal world. So here's a great example. So on the 31st of 2010, let's say you received almost just before you close your office, a client came in and he said, I really like for you to represent me. It's a Friday, and he just gave you a check for $1,000. Okay. It could have been in a trust, so you put that into so in your bookkeeping software, you probably accepted the check. The physical check is still with you in your hand, but you recorded it in your bookkeeping software as a ledger into your trust. Okay. But your bookkeeping software would now give a number $1,000 more compared to your bank because you've still not deposited that check to reflect in your bank. So if that is the case, you want to tell us what those outstanding deposits are or checks are. Likewise, here's another example. Let's say you wrote a check as part of maybe an expense for that particular matter, or you had money coming out of your trust. You've sent a trust check. Let's take that as an example. But the other party that received the check has still not deposited into his bank, which means the money has not been withdrawn from your trust account. Whereas in your bookkeeping software, you've already accounted for, which is the right thing to do, you've already accounted that money should have left. So then there's an opportunity that the bank seems to have more money on this particular date compared to your bookkeeping software. So here are some of the examples of why and how these two different systems will potentially be different based on the timelines. So this particular document is not about to balance and ensure the numbers are the same. This particular document is about defining why they're different, showcasing the information, and then ensuring that you understand if these numbers have to be the same, then these are the outstanding information that's missing. The third step is recording the client's trust listing. Okay, so what is this client's trust listing? When you add up all the outstanding, based on the last activity date, if you kind of outline all of the trust amount for your client by client, that's the total trust listing. And obviously the fourth step is comparing those two numbers. So when you add, subtract these anomalies based on real life itself with this particular number, it has to balance. And it's not that the numbers are same in both these systems, but they're balanced because you've accounted for the anomalies in steps 2 and 3. Okay? Again, I want to reiterate, this is a step that you do every month, just reconciling of your trust between your bookkeeping system and your bank. And given the case that it's not perfect, you want to define what are those anomalies, what are those outstanding checks and deposits that kind of add or subtract potentially to give you that balanced trust. Okay, so this was probably the 7th document, if you will, in our list of documents that are part of that bookkeeping compliance requirement, bylaw 9. Another document as part of that is your fee book. Okay, and what is a fee book? And again, what does it take to maintain it? A fee book really is a record of all your invoices and disbursements that have been raised as invoices. Okay, so and these have to be recovered from clients. very simple. So you have a client, you have a matter for that particular client, and you raise an invoice, and that particular invoice could include dockets that are time, um, whether it's flat rate or billable time, that doesn't matter. These are consist of these dockets. It could also consist of disbursements, because that's another way of generating revenue, if you will, through that matter, raised as an invoice to that client, and it is recoverable from the client. The fee book obviously will then consist of that invoice number. Okay, so when you raise an invoice, it's important that you have an invoice number so you can always track and have that audit trail. But it's equally important to know which client it was billed for, and even better if you can tell which matter it was raised for. Because you have a client, you could have multiple matters for the same client. And the last piece of information, equally important, would be the associated tax that you collected as part of that invoice. Okay, so let's take an example of this first transaction that happened on July 2nd. There was an invoice for Jackie Jones, and that invoice was 001 was the invoice number, and the fee that was billed was $100. Okay, there was no disbursements, but in addition, the person collected $13 of HST, and the total billed was $113. So here's a perfect fee book that captures the date when it happened, the actual invoice number, the client. You could go one step further and maybe also define the matter for which that was captured, the fee that was captured, disbursements if there were any, and the total tax. And also an important component, the last component of this particular fee book, is also recording any discounts that you may have provided. Okay, so let's say there was an invoice for that same $113, but maybe it was originally $200, and you provided a discount of $100, and that's why you're billing the person only $100. If you do provide that discount and it's reflected in that invoice, then that needs to be captured as part of the fee book as well. Okay, so again, capturing what is a fee book. The fee book records all your invoices and disbursements raises part of your invoice that are recoverable from clients. It also captures any discounts that you may have provided as part of that invoice. So when you add that to the mix, you now have maybe 8 documents. So there's 2 ledgers, 4 journals, trust reconciliation report, and then you have your fee book. So 8 documents so far and counting. And some other compliance documentation. So we spoke about when you do the trust transfer from trust to general, and you do that in today's context in an electronic format. So moving money from your trust bank account into general bank account using your online banking, that's considered an electronic fund transfer, and that requires a Form 9A for every transaction. Okay? Cash deposits that need receipt and deposit slips. And another great example of a document that is part of that whole bylaw is also what they call as an intermatter trust transfer. Now let's take an example of real estate where you're working with the client to purchase a condo, but let's say you're also the lawyer for the selling of his previous property. And let's assume that there was trust money from the first matter, and there's about $200 left of trust money, and then the client says, you know what, I'm going to engage you also in selling my current property, so please use that $200 as a retainer for that second matter that you're going to create for me. Then how do you do that? You actually do what they call as an intermatter trust transfer. So you transfer that $200 from the first matter you work on that client for purchasing that condo into the second matter, which is selling off his house. It's important, though, that you record those transactions of money moving from that first matter into that second matter. Okay? And we can look at a few of these examples when we actually get into a demonstration, because there's quite some time left in our webinar today. And I do kindly request that you use our chat window to ask any questions that you may have. Our support staff are online and they would be happy to answer those questions. Okay, so when you start including your Form 9A and your inter-matter trust transfer document, then you have almost a 10 to 12 document compliance checklist that you generate every month, and that's it. As simple as it sounds, it is truly simple to generate these documents as long as you have a disciplined manner of capturing the information, hopefully as and when it happens. Okay, the sooner to reality, the better the memory, and hence it's easier on any software to manage and maintain. And with the advent of software that are particularly defined and tailored to do legal accounting, the much more simpler it is to generate these documents. So comes the most important question. So these are all the rules that now we've defined that you have to play by. Okay, so those are the documents that you have to generate and record and store and present when asked for. How much time does it actually take you to do that? So if you were to do this in a very manual process, then obviously that's going to take you a lot of time. That's going to leave you frustrated. It's going to have errors that have to be corrected. Again, you always have external help, but time is money, whether it's yours or any third party that you use. So at the end of the day, if being that empowered legal professional as you are, it's all about capitalizing and being profitable with your business. So every minute of your time and your people who help you with this time is equally important. And every entry, as we spoke about manual work, the fact that almost every entry within your legal accounting world is a double entry means that when maintained, you need to understand the records and how it touches two sides of, let's say, a balanced book. If you have an accounting principle, there is double entry system. One touch point on one end means that there should be another touch point on another end. So if you're doing this manually, you have to ensure that all the time. And let's say you have to record the same information several times, and then obviously that's leading with that manual effort to mistakes, human error, which is very difficult, especially if you've done this 2 years back, 3 years back, and you're having an audit after 3 years. It's so much harder to go back in time to correct these mistakes. Even if it's going to be on a monthly basis, depending on the number of transactions that you have within your business, that itself could be harder if there are manual errors. Okay, so we want to highlight what these documents are to begin with. This is by no means to showcase the uLaw product. We're just using the uLaw product as a means to demonstrate what these documents look like and how they reflect what these compliance requirements have for you as requirements to begin with, and how reconciliation and generating these documents can be far more simpler and lesser time consuming. Okay, so the last slide for me from today's webinar's perspective are the benefits of legal accounting software. So we spoke about the different types of accounting software, but the legal accounting software is a special type of software that was tailor-made to manage the aspects of legal accounting, recording those events as and when they happen. Really important. It empowers you and it allows you and capacitates you to do that, so that it's a great discipline to have. Legal accounting software also record financial records and bank records and try and keep them as close as possible and make that reconciliation a much simpler task. Okay, and when it's finally about compliance and accountability, these legal accounting software, as I mentioned, PCLaw and uLaw come to mind right away. They allow you, again, to be compliant and stay accountable. Before I move on, again, uLawPractice, we're a Canadian cloud-based legal accounting software and practice management software. So let me quickly shift gears. I'm going to have this presentation kept aside, and we're actually going into the uLaw system. Don't want to highlight the software. It's just a CPD, but it's still informational. It's still informative about how you do that. When you actually have, let's say, a matter. Let me jump into a contact. We have another 20 minutes to do this, so might as well take this one at a time. So let's say you're actually adding a client, Mr. Jonathan Blake, and let's give him a fictitious address. He's in Ontario, Cambridge, in Canada. And we'll mark him as a mailing address. And why don't we also figure out how he got to know us as a client. So let's say it was a client referral, referred by Blake. Okay. And let's go ahead and save that information. So that's your client. So the whole purpose of this demonstration as part of the webinar is to quickly showcase to you how we generate all those different documents that the compliance needs you to do. So here's Mr. Jonathan Blake. Let's go ahead and create a matter for him. And let's say this is a fence issue. For some reason, I always love the fence issue. I don't know what that is. Obviously, a very touchy subject in today's context. But let's say it's small claims. Let me go ahead and quickly save that. And now let's assume that for Mr. Jonathan Blake, you have actually taken a retainer. So going back to our original example with the bookkeeping guideline, we looked at Peter Piper. Well, actually, I could have called this individual Peter Piper on hindsight. Let's go ahead and accept that retainer of $1,000. And again, we're capturing now the method of payment. That is important from a journal perspective. And let's say it is a check, and that's the check you've received. You're obviously able to give him a receipt for it, a great practice so that there are no challenges after the fact. You go ahead and you apply and you accept that $1,000 retainer into your trust account. So for those who didn't capture that, let me go back and show it to you. That money of $1,000 that you received as a check, and the check number being 5656, was moved into your Scotiabank pool trust account. Okay. So that's one transaction. Okay. So if I were to quickly look at my accounts, there is Mr. Retainer receipt from Jonathan Blake for $1,000. That's a deposit or a debit or a deposit into my trust account. And most importantly, it is debit into my trust account, but being a double entry system, as I said, it's not just over with one touch point. 1,000 here means 1,000 reduced somewhere else. And that's a credit, so debit credit, double entry. So the credit is in your trust amount clients. And who is that client? That's Jonathan Blake. Okay? So uLaw obviously does it in a more seamless way, but any legal accounting software should enable you to do that, manage that double entry by itself, so that you don't have to remember what that double entry should be. Moving along, let's say you were putting some dockets for this particular client. It's an initial meeting. You can explain what happened during that particular meeting. And let's say you've actually spent an hour on it, but you have the luxury, based on your retainer letter, to charge him 2 hours for it, and based on a $200 per hour rate, including the 13% tax that you're going to charge him, it's about a $452 bill. Let's go ahead and add a disbursement. And you have the opportunity of dispersing both from general and trust, as I mentioned. And if you do a disbursement from the trust, then obviously that would be managed as part of the trust journal for disbursement. And let me go ahead and say court fee, and we'll add a nominal $95, and I believe it's tax exempt. And who did you pay it to? So it's the Ministry of Attorney General. And let's assume that this was a check that you wrote out of your general account. Okay, and let's say that was your check number. Let's print that check so that you can print it right into your laser printer and have that sent over to the court. Okay, now a couple of things have happened. You obviously have generated that trust, and I'm sure you're able to appreciate that these are just numbers that happen in real life when you're docketing, you're dispersing, and you're generating invoices. And all that the Law Society wants to know is they want you to just capture that in any software or any system, could be even a manual system, just capture all those transactions as and when it happened and tell them that so that they can then help you with understanding the compliance that governs these rules. So here's a particular check that you can, of $95 to the Attorney General. Let's say we raise an invoice at this time, which is a legal document. We looked at Peter Piper. There was that invoice 2 that was raised for that particular client. And an invoice has been raised, which includes, and again, this can be part of your fee book too, but now that I've raised that invoice, which you would probably do in your real life, using any system again for that matter, you have your docketable billable item, which is that first meeting that you had for $200 an hour for 2 hours for an amount, and that was the tax that you collected. Very important to capture that. And this is a running bill at uLaw, which allows you to capture all the information. So again, here is your disbursement of court fee that you paid out from your general. And here's a retainer that he paid you for $1,000. So basically, that's the retainer balance left in trust, and it makes it easier for you to then electronically send it to your client. Once you've raised an invoice, now let's go back into some of those documents that we looked at, okay, one at a time. So if you go into our document generation, I'm going to just use this as an example. It could be anywhere in any system. If you look at a ledger, you've got your trust ledger, your general ledger. In fact, we go one step further and also give you an expense ledger, but the compliance talks only about the trust and general. And you've got the 4 documents we spoke about, which is the receipt for both trust and general. And you've got your payments for both your trust and general. You've got your trust reconciliation, which then, you did have that $95 being sent out, but that was from general. But let's take an example of $95 sent out from your trust. That's still not reflected in the bank. The intermatter trust transfer report that gives you a list of, on a periodic basis, tells you all the intermatter trust transfer touch points. And more specifically, there's a panel called compliance that really talks about all those documents. So the 2 ledger documents, trust and general, the 4 journals, trust receipt, general receipt, trust payments, disbursements, and the 4 documents, intermatter trust transfer, fee book, expense book, and finally your monthly trust reconciliation. And it's actually almost a click of a button. If I were to just do the trust ledger, click on it, I can even do it let me just do it for an individual client, so it's a little bit more simpler for the purposes of today's demonstration. I think it was Mr. Jonathan Blake. And this would allow you to appreciate the need and how that information is captured. So here's a quick example of an intermatter trust transfer that you need to manage on a monthly basis. So this is for the month of February, and the information you're capturing include the date, very important, particulars of the or source of matter, for which client, for which matter, and any amount credited and any amount debited. Okay? And let's look at our client's trust ledger. So this was the first document we looked at, which was a trust ledger. So for Mr. Jonathan Blake specifically, and if you were to quickly go back into my presentation, I do apologize. I will get to it, but it has the date when that particular trust came in. It has the particulars of what it was for whom. Goes one step further to even tell you the matter. So if it's a retainer for Mr. Jonathan Blake for that particular matter, how was it received? It was received through a check, and it was a receipt. And that's the balance left in trust. Now, if I go ahead and generate, let me go ahead and do a general for that same client. And I sincerely hope you're following. Please send in your questions as you find them through our chat window. So this is almost an interim trust journal, trust ledger, and general ledger, right? Just to prove a point so that it's clear as to what you're capturing as it when happens. So if you were to run these reports as and when it happened, this is what it would probably look like. So remember, we raised that first invoice, which consisted of a 2-hour docket and a $95 general disbursement. The general ledger captures that. It captures what's in your invoice. It captures Feb 24th. Unfortunately, it's all in the same day. But for Jonathan Blake, for that fence issue, the particular was the legal fee. It was $452, and you would notice that it captures both the tax as well as the actual amount. So it's $52 of tax and the 2 hours of work. That's for $452, and there was no tax in this particular disbursement, so it's just the $94. That was the $547 as per your general ledger. Let me go ahead and look at our fee book. And if I were to download it for this particular month, when this transaction happened, you should now capture by date, and this is in ascending order, but by date, you've now captured that particular revenue through that invoice that you raised. So here are those 2 line items. One was for Mr. Jonathan Blake, because again, we spoke about how a fee book captures not only your billable items, but it also captures your disbursements. Okay, so for Jonathan Blake, here is that invoice of $400, and here's your tax. Likewise, here's the disbursement of $95 with no tax, and that's the amount. Okay, so by just doing what you do, which is do your work, docket your time, disperse the client, raise an invoice, the documents are being prepared as per the compliance, and those are the documents that you need to save, as and when it happens. So if you're able to quickly generate those documents on a monthly basis and be able to quickly store them as and when it happens, so nothing like it. So if I were to quickly go into my cloud storage and be able to drag and drop them, that would just be much simpler, and that's the discipline that you can build. So let's just go ahead and complete it so that we have a full picture. Let me just go ahead and put another docket. I'm going to say final closure. I'm going to make this a $400 flat rate. We spoke about maybe a trust disbursement, so I'll probably go ahead and do that. So it's about 114 left. So let me go ahead, add a new disbursement, paid from trust. So let's say that you wrote yourself a trust check number. Let's say it's an application fee, and this was paid to and this is again coming off your trust account. You can print a check and type it on, but I'm just going to go ahead and generate that particular disbursement from my trust. Okay? And now if I go ahead and raise an invoice, and all of this is only to prove a point that as and when you capture the information, these documents are just a proof of recording of those transactions as and when it happened. That's really what the whole point of this webinar was, is to again demystify and really highlight what these documents mean and why they mean what they mean and what are they asking it for, right? So these are day-to-day tasks that you do as legal professionals, and then the documents are just a mere reflection of you telling the Law Society what happened, when it happened. So here is the final closure docket, a flat rate of $300 plus the tax, and you had a payout from trust, which was a disbursement of $114. And let's go ahead and the one thing you've still not done is made that money because you've not done the trust transfers. Okay? So here's that $886 worth of trust transfer because the $114 that you paid for that application fee has already been taken off. Okay? So let me now go ahead and move that money. So this is the trust transfer, and this is where the Form 9A comes in. That's one of the other documents we spoke about. So you had your legal fees, and though the total invoice raised was for $1,000, you only are moving what's eligible trust transfer from trust to general because, again, why is this $886? That $114, which had made this $1,000, was taken off directly from your trust as a disbursement. Okay? So it talks about the date. You're moving this from your trust account into your general account, and you could write yourself a check, but just for the purposes of this demo, let me go ahead and do an electronic fund transfer, just really moving money from, I think we've spoken about this, from the online banking that you do. And when you do that, you have the opportunity to now fill that Form 9A. And what does that Form 9A consist of? The requisition number, the date. It asks you for your debit account or your trust account in this context. So you can provide your trust account, who do you bank with, and again, for the general account, they want to know what is the number, and again, who do you bank with. And technically, this both should be Scotiabank. And this is the Form 9A that you've generated for this particular matter, as and when it happened. So there you go. So here's a pre-filled Form 9A requisition number. It tells you the reason. It tells you the two different banks that were involved. And this is, you can always add additional information. You do obviously have to sign this. You can print this, sign this, and file it, or you can electronically sign this, regardless. And that's pretty much it. Now if I were to go back and generate all those documents, so we looked at the ledgers. Now let's look at the journals. So we look at the trust journal. Okay, let me do it for an individual client to keep it simple. So here's the third document. So this is really the money that was received. So that's the receipt. So Feb 24th from Mr. Jonathan Blake for that file number, we received that $1,000 via a check. So that's one document. Let's look at the client's, the general journal. for Mr. Jonathan Blake. Okay. Now this is a little bit more interesting because this really talks about the date the transaction happened, who was the receipt from, the source, which matter, it goes into the file number as well, and what was the purpose of the fund, as the journal captures that, and the amount, and very importantly, how did you move that money out? So it was an electronic fund transfer, and if you remember, that was the requisition number that we put in. That's how the money was moved from trust to this particular general account, and that's that journal, right? It captures all the amount, and it tells you the amount as well. And it's 886 again because 114 was moved from trust. And the question is, how do you record other forms of payment? So whether it's a retainer or if it's a payment, when you look at the method of payment, you have all these different methods that we've listed. And if it was an email transfer, each and every transaction in real life would actually have its corresponding receipt or payment reference number, and that's all that you have to provide. Okay, hope that answered that quick question. So moving forward with the flow, and we have maybe 2 more minutes before I can open up the floor for any questions. So we looked at the ledger, we looked at the journal for both the trust and general. So let's look at the payment and see how that works. So if you look at the trust client payment, a journal, sorry, you're going to notice obviously the number for 886. So here is the Courthouse Toronto, so it accounts for the 886 in billable time plus the 114 that was for the disbursement from trust. So it was for the Courthouse Toronto for that particular matter. Here is that $114 disbursement. And everything else, as you know, accounts for the 886 that was done as part of a trust transfer from trust to general. And the last journal that's available at the click of a button is your general client, or payment, sorry. And you could do that for a particular client. So here are your 4 journals, and we looked at the 2 ledgers. And this specifically talks about the matter, the file number, client, and purpose of payment. Okay, so you've captured the 4 journals, the 2 ledgers, and then we move on to, if there are any intermatter transfers, you generate that. And as for the trust reconciliation goes, okay, so this is your current trust listing, which is really step 4. The software tells you, as of today, that's all the trust money that's left, okay? So if I were to go ahead and say, you know what, I have still not deposited those particular 2 transactions. In fact, I would say so we looked at how you're telling us what those outstanding checks are. Let's assume those were the 2 outstanding checks that were still left. And assuming there are no bank errors, these 2 numbers currently match. So that's how you reconcile it. Today, you're telling us what the bank balance is, and obviously we're assuming that the bank balance was $1,000 more because of this particular outstanding check. That's why it's off, and we're telling the Law Society, why was it off? Was it because of these particular 2 transactions? And then you generate this one last document, which is the monthly reconciliation for the month of February. And as we continue to generate that, the compliance obviously has all those particular documents listed. and this is the last document as part of the compliance, which talks about the balance per bank statement less the outstanding checks and the reconciled pool trust account as on the state. It also lists what those two items are and why that difference of $1,000. And as per the compliance, this is what they ask. They ask basically for your entire client trust balance. So every client by last activity date, what's the balance in their trust? And that's pretty much it. So really to close out on today's webinar, we looked at those 9 or 10 different documents that the Law Society would need as part of their bylaw that you capture on a monthly basis. And we showcased how easy it is with the advent of technology, with legal accounting software today, for you to go ahead and generate that. So with that, I would like to open the floors for any questions, especially with the chat window. If you would be kind enough to use our chat window to ask your questions. And just as a gentle reminder, kindly request the participants to send us an email confirming that they did attend today's webinar. And just in case, it's great that we keep a record of it if anytime you need that as well, or if the Law Society were to ask for it. And you can log into your Law Society's portal and then account for the 1 hour of CPD credits. And today's CPD, you should be searching for the Law Society's Bookkeeping Compliance. That would be the topic or the subject that you would search for within the Law Society's website so that you can account for that 1 hour. The email address is, let us put it on our support line. It's support@uLawPractice.com. Good question about HST reconciliation. Okay. If you look at the tax, again, being a legal accounting software, as and when you either pay tax or you accept tax money, it's important that particular transactions are captured. And when you actually do a reconciliation, this is pretty much it. When you generate a tax document, it captures the taxes that you received and the taxes paid, and when you balance those, the end judgment is whether you owe the government tax money or whether the government owes you tax money, right? So you actually do it on a quarterly basis, but let's just do it for the monthly basis for the purposes of today's presentation. And if I were to look at my HST report, it obviously combines both the HST payable and receivable for that particular month, and it tells you, single snapshot, that $276 is what you owe the government. Okay? And why is that? It's because right from February 1st till the last February 24th, that is today, what this report captures are both the HST paid and the HST received from your clients. So taking today's example of Mr. Blake's, so if you look at Mr. Jonathan Blake, there were two transactions, in fact, across 2 invoices. The first time, it was $52 for that $400 fee. So we captured $52 of tax that we received from the client. And there was another $39 tax of HST that we received from the client for that $300 flat fee of final closure. Okay, so that was the total HST that was captured. But let's say, and again, legal accounting software like PC Law and uLaw also are a full-fledged business accounting software. So if you as a business have paid HST to the government, so in this particular case, you had actually, you probably went to the nearest Costco or Walmart and paid $4.68 for this matter as a fax disbursement, then that's captured too. And when you balance these two, then the HST report gives you that insight of whether you owe the government or the government owes you. And hope that answered that question. Again, please feel free to send us more information, or if you have any questions that you want to think about or ponder about, and send us to support@uLawPractice.com. We'll be more than happy to respond back to those. And again, kindly remember to send us an email confirming or ensuring that you've attended today's webinar. Thank you very much for attending today's webinar, and we look forward to seeing you in our fresh series next month.